1 2 CTM. What's going on, everyone? I hope you're well and doing great on this Thursday. Ace, could you please go ahead and post this link inside the announcements channel? I'll get it out by email to everyone afterwards. I'm glad you saw that. Thanks for that. I don't know what happened there, but let's get that going for sure. Boom, 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 boom. CTM. We're gonna be talking today about what's going on. Bitcoin continues tightening, coiling underneath that resistance, looking for a potential breakout. That breakout we looked at closely in detail, what our expectations were for, and initially upon the breakout. Is tomorrow's Core PCE, Fed's favorite inflation data point, going to be a catalyst to perhaps send it? Big data point to get out of the way tomorrow. Markets now expecting the Fed over 80% chance to begin cutting after Powell testified this week, Tuesday and Wednesday, and the dollar is breaking down because of it. We're going to take a look at what that potential ramifications may or may not be. And then we're going to take a look also at platinum awakening and check up on that. It's been a couple of weeks since we've looked at the metals. We'll make sure we do that as well. I'm so sorry about that, Doggy Nation. How does the mic sound? All right. Awesome, Ace. Appreciate you very, very much. Very much. All right. Let's start this off. Let's just start off with looking at our positioning, and we have to talk about a MicroStrategy update. So stocks, TQQQ now holding double digit. Well, it's been double digit for a minute. 20% milestone unrealized gains. Absolutely loving it. NVIDIA, 9%. And then we see that we had a new entry today. That new entry on the new template for the spot ETFs, IBIT. Now, this was modeled out on GBTC. And since everything is in sync, this is currently right now at break even. Taking it even further, Tesla still out on the sidelines. And then, boom, MicroStrategy. I want to talk about MicroStrategy for a second. This is important because yesterday afternoon, I sent out. I love this. This pattern reminds me of TechDev posted this great chart of this really, really, really incredible consolidation taking place in the altcoin market. I think he used Coin Market 3. I'm not really sure. I messed up. I thought it was a chart versus Bitcoin. I was like, wow, this goes either way. If they pass like a Bitcoin Act, for example, we're gonna see Bitcoin completely eat alts, and dominance is, like we said, going to 70, but it might not stop there. But that's not what the chart was versus the US dollar. And we always talk about Bitcoin being the rising tide that lifts all boats. All coins look like against the dollar, they're getting ready for a dynamic explosion upwards. And hopefully we'll be able to capitalize that on our trading versus Solana, Ethereum. Now, Cardano still looks weak. We're still holding a nice short position on Cardano, and that position continues to just build out into profit. Still 18% now on the short side. Bitcoin now just barely break even here, 1% into profit, but we'll get into that into a minute. And I mean, why was my mind going from altcoins to MicroStrategy? I'm not sure, but it reminds me of this pattern in Bitcoin in 2012. It's almost identical, including this launch pad that's developing. I think it's set. I mean, dependent on Bitcoin's breakout, next leg up. Yeah, but Bitcoin looks like it's getting ready here to make that major breakout to the upside. And if it does, and if that coil leads to that mess, Microsoft's going to explode out of there. Look, you got to go into the dashboard. You got to go down to the new MicroStrategy, right? Click on the link because this was now updated, and your chart is not updating like to the new version. Go ahead and get the new version, I'm just gonna right here. You can just click on the link and pull it up, and it'll say instead of 0102. So we check out the difference here. I mean, this is beautifully modeled here, right? From 2020 till today. I mean, when you start compounding large gains year over year, and then you look back a period of 5 years, the returns are ridiculous. But the returns here are ridiculous in 2024, in 2023, like ridiculous. And it looks like we're getting ready here for. I'm gonna go ahead and put that chart on over here, and you can see that the drawdown though is drastically reduced over here. 20% for those type of returns are beautiful, but this is where we want to be, and you can see that in 2024, 500% return. In 2023, a 200% return. Unbelievable. And I think that MicroStrategy is going to continue here to do some beautiful things ahead. A lot of people, that's a different conversation. And then FNGU just remains trying to revert back into the next time we get an entry after all of I mean, that was unfortunate. If T triple Q is holding a position 20% into profit, that that FNGU right now would be 30, 40 at least percent into profit. That was unfortunate timing. This is life. This is what happens always. And here we are. You know, we'll get going. We'll get going. Everyone, great to see you in here. So make sure you update to the new MicroStrategy chart. And then right now we're holding 3 positions open on stocks. And then we're going to go ahead and keep going. The coil continues. Talk a little bit about the dollar today, because the dollar as measured by the DXY is breaking down. It is breaking down outside of a massive channel. And we're going to talk about what could be different between what happened as start of 2025. The US dollar is down before today 10%. And if you would have asked me in January, hey Jordan, if by the summer we're looking at the US dollar down 10%, what do you think Bitcoin is going to be doing? And I would not say to you, well, I think it'll be exactly where it is today. I would not say that to you at all. I would say I think it's gonna really it's gonna be running towards the top of its channel. It's gonna be running hard and strong, right? No, it does. I mean, check it out, Eli. You could go ahead and check that out. I don't think so. But check it out and then let me know. Check it out. Let me know. Um, but the spot ETFs. Now it was modeled on GBTC. I used it on IBIT. IBIT is the most volume. Could it be used on any of the spot ETFs? I've looked around and it seems to be the same exact performance, which makes sense as they're all tracking the same. But that's up to you. MSTU is yeah. Well, MSTU is double my. But you guys want to check it out really quick? So we're gonna have to. I guess we can't really tell, right? So in this, I mean, you could go to this trade over here on April the 25th, and massive difference, and that's, I mean, I'm just spitballing here, but that's likely because of the stop. I imagine if the stop is going to be twice as big, maybe if you adjust the stop twice as big, I don't know, the drawdown could be dramatic then, right? Let's go. Nope. That ain't doing it. Now, listen, I know you all love, you know, get yourself on some guys. This return here. I mean, MicroStrategy just had a significant drawdown. If you come from the top all the way down here to the belly, a 54% drawdown. This template over 5 years, back testing, to 12% drawdown. And the upside, I mean, versus buy and hold, you're demolishing buy and hold. So I don't know. I mean, listen, it's just not needed. Like, guys, we are very willing and able to take on risk, but calculated risk. Calculated risk. There's no, a lot of people, a significant amount of people would just simply be way better off if they follow their plan and they trade with discipline, with patience, and just make sure that they're executing their plan. A lot of people who have taken on extra risk, it hasn't put them forward. It's put them behind. It's super volatile. It's obviously yeah. Um So we're talking about the Bitcoin and the dollar story here. This is significant, and we've had, of course, some major events take place with this 30% correction. This 30% correction, by the way, was amazing in the sense that Nasdaq also corrected 30%. And in the past, when you see the Nasdaq correct 30%, Bitcoin's got to be off 50% or so. To see it in a 1-to-1 ratio says a lot about the continuing rate of adoption that's taking place. And it's very clear to everyone at this point. It's looking a lot more than suddenly. And it's very clear between the corporate bid at Bitcoin, between the institutions, all the money flowing into the spot ETFs, that adoption is definitely having ramifications going forward. It's not that like Bitcoin is immune. If we enter into some type of turmoil period, Bitcoin is going to be correcting. But I imagine even under the worst circumstances would be like, hey, listen, last time in 2020, under a liquidity crisis, Bitcoin corrected 62%. That's not, I don't, it reminds me of gold back in 2008 during the great financial crisis. And during a liquidity crisis, it corrected 30%. Fast forward to the 2020 event, liquidity crisis, Bitcoin only corrects 15%. And I think that Bitcoin's correction going forward, that we're going to continue to see reduced downside volatility, but that's comparing it to its past in its hype cycle and in its facing reality stage. So, and you just saw even in the last bear market, even with the shenanigans and fraud of FTX selling Bitcoin they didn't have, you saw Bitcoin have that reduced downside volatility, 76% correction compared to 84 and 85, the two previous bear markets. That's going to continue, and it's become a lot more noticeable to a lot more people going forward. So the reason I bring that up though was because of Bitcoin and the dollar, and I just want to point out that there was a major event of uncertainty that took place in this particular period because we were seeing the dollar down, we were seeing equity markets down, and we were seeing Bitcoin down. Because you might be wondering, well, what's going to be different this time? What's going to be different right now? We're seeing the dollar. Remember yesterday's stream, we said if we close below this line, it's time to flip flop back short the dollar, right? You don't always get to ride it like we did from here all the way down to here, right? We've been flip-flopping ever since. But this is a major breakdown that's in play, and it's a major breakdown because this channel that we're in goes back all the way to the great financial crisis and to where QE started. And right, yeah, Joe, I know that's a one touch, right? That's a one touch breakdown that's in play right now. But this channel is the structure throughout. We're making a new breakdown. And this breakdown, by the way, this one is likely going to help risk continue as it's sent upwards. What would be different between when we saw the dollar come off 10% and we didn't see, risk respond well that time? Well, the major difference was the amount of uncertainty that was taking place. And everyone did not know what was going to happen. And if you could see it viewed over here in the red, you have this is when we're into the dollar massively appreciating and you're seeing Bitcoin correcting. Then when the dollar finishes and starts consolidating, going sideways, even making a higher high, you saw Bitcoin had bottomed over here and was rounding out. And then when the dollar began really breaking down, you saw Bitcoin really ascend. Now the difference was over here, same thing. The dollar, massive appreciation. Bitcoin, bear market, and then when it stopped and the dollar began consolidating sideways, even making a higher high, Bitcoin was rounding out to the bottom. But this time the dollar came off massively, 10%, and Bitcoin, it didn't do anything. The expectations were that it, ahead of, I mean, obviously the whole Liberation Day hoopla was not factored into the situation ahead of time, and that's the difference of what is taking place. If the dollar on that breakdown we're seeing right now continues to really carry to the downside, will this time be different? And will this actually put a huge sale into risk? I believe so. And I don't believe that Bitcoin is going to shoot up like that. I don't believe that happens outside of actual nation state adoption. And right now, it seems that we have the whole OGs distributing and the whole corporates eating up into that OTC supply, and that's a good equilibrium. But if you start taking nation states and they begin, if the United States of America passes a bill saying over the next 5 years they're accumulating 1 million Bitcoin, it's going to ignite actual FOMO, and FOMO from entities that could actually move price and send it with such a large market cap into a spectacular ascent. I don't even care. I want to continue in the sustainable channel that we're currently in, that has been the longest sustainable channel of Bitcoin's life. Remember, we were looking at it yesterday, and it remains the same. You have to explain yourself as you laugh. It's funny how many people are they're just really poor. They're really poor at being able to um yeah, I don't know what else to say. That's fine. But look, if you really poor, you know, really poor, really poor, I guess critical thinking skills. I don't know what else to put it. But anyway, let's keep going. Um dude, if you could just leave a thumbs down and leave, it would be so helpful. You'll be over here and you're in this channel like this, and this one obviously has gone on even further, actually a year longer than the past. And this one wound up doing what happens when you break out of an ascending channel to the upside. You go up really high and then you revert down to the mean, and then you entered back into that same path. If you continued this path, it's the same path. And then it happened again in 2021. Bitcoin began ascending really high to the upside, and then it had the reversion back to the mean. And then the whole path continued and continues to now. And this time it's staying well within that path. And that path is what we call the sustainable channel. And people don't understand. I know you understand because you've been here. I didn't think I was going to bring up this today, but I have to bring this up to show you. And again, this was we were able over in January 2022 to produce this work and say what we believed would happen next. And then you move forward. Here's a really clear way to illustrate it. And assets that are undergoing S curve adoption, assets that leave facing reality and move into that or early adopters, right? You're an early adopter and they move into the early majority. The institutions are here. The corporates, public companies are here, and they're buying massive amount of Bitcoin. And what you start seeing is a different trajectory. And what's interesting, it doesn't mean that there's no corrections. It doesn't mean that, it means that volatility is reduced to the downside. But check this out. And this is what a lot of people really get wrong. This is what a lot of people are not able to grasp because everyone is so used to diminishing returns because you have this massive hype phase, and then you start seeing over the future during facing reality, you do see diminishing returns. There's no question about it. And everyone thinks that power law and this is, but no, what happens in an S curve is that further down the line, you're going to move into a place where you wander up back towards the top deviations. And that's going to surprise a lot of people. This is not projecting, by the way, just so everyone is real. This is not projecting a price for Bitcoin or anything like that whatsoever. It's trying to illustrate a potential path into the end of the year and one that likely will play out. And I got try to I like to illustrate it like this. Instead of us outside of legit nation state adoption FOMO taking place and something that would cause price to shoot up to the upside quick and rapidly. More likely, what we're going to see is Bitcoin into next summer, right here, right around this area, right on time. And the only difference is that we're going to be seeing. Sorry, this wasn't prepared for today. I didn't mean to get into this conversation, but it's so important. So here we are. And likely what we're going to see into next summer is Bitcoin somewhere in here. And you're going to see the like right now we're at the bottom. We talked about this in detail yesterday, but we're going to see Bitcoin above this 2060 20 cycle. It's going to be over here in the middle between the two. I don't know. That particular example is using Amazon. And if you look at Amazon on a linear chart, it'll probably be wild. I mean, as is Bitcoin. Was also wild. I guess actually, I don't. I mean, might forget if I don't take it up tomorrow. Um, Same thing with Nvidia, right? You look at Nvidia ever since 2013, and you got to do it on. Let me zoom out over here. You ready? Just look at that chart. Absolutely ridiculous. Look at on a linear. So I mean, when you're seeing that type of price appreciation, to you, I don't want to tell you you can't. You can do anything you want in this world. You should not like walk within the lines that other people have drawn, and you should have the creativity to be able to explore. And it's those that do that are able to wind up to go on to do great things. And even as we look at this chart of the US dollar and in this channel, like this is on log, and everyone will tell you, I mean, this is on linear, and everyone will tell you you can't do that. But hey, I have to say there's a lot of good alpha here on the log, and I'm gonna have to go ahead and reevaluate because from a log standpoint, it's hard to argue with it. We're coming into a bit of support, and further support winds up being down here at 95. So I'm glad this conversation came up this way. Now I know we peaked above right here for a day after QE started, but that's just a little bit of a wick briefly, and then we've come to the top, and three times we've been able to go ahead and touch it. I don't know. I'm torn now. I'm gonna have to spend a lot more time with that. BlackRock's only saying 1 or 2% allocation because I remember speaking with my family in 2018. Bitcoin is $3,000, and I'm like, listen, it's going to $100,000. And if I would have told them that it's going to 1 million, it's not stopping there. They there's that's too wild. And if BlackRock all of a sudden is advising its clients, like, forget the 60/40, you should you should be, have an appropriate position to Bitcoin to how you understand it. And, they have to get people off zero. And then as they get people off zero, and then people see number go up, and then at that point, people's allocation is going to become obviously much and much higher. What's been driving the uptrend of the US dollar up until now? I don't know what the answer is to that. One of the things I was thinking about when we were talking about, is it possible that, risk doesn't respond well as the dollar continues to drive? I don't think that's going to happen. I think that the uncertainty about these trade deals, and what was going to happen with all the tariffs, is what caused what would normally be a a risk off situation, and it was risk off. Risk was totally demolished, but normally dollar is bid in that situation, and this time the dollar was not bid, and the dollar sold off, which is the clear intention of the administration. But I think that had a lot to do with, well, if we're going to see trade reduce, there's less need for the dollar. I think, or last time in 2016, it wound up being, it was the other countries that the tariffs were placed on, that wound up devaluing their currencies to make up for the tariff. In this time, it's the U.S. dollar which is largely being devalued to make up for that price. But what caused it to rise? I mean, I feel like the best source to look into that, and he'll probably answer if you ask him, is Brent Johnson, Dollar Milkshake Theory, and he will give a very clear why, and the dynamics involved. I'm not able to do that. I don't know. Yeah, that's a good. Well, let's move over to gold for a second. And right, so if you go back to the episode in in March of 2023, we talk about gold is about to enter into its super cycle, and we talked about it's not going to stop at 2,500. I'll see you at 5,000. That was the work we did, and the work we did was largely dependent on what was happening as far as Fed policy. They had begun a rate hiking cycle, and basically, one of the dynamics at play here is, as the Fed begins to put the brakes on, eventually that leads to a slowdown. And I mean, listen, we're we're into 2025, 3 years later. Economy is not yet slowing down. But I mean, GDP is estimated right now at 3.4%. But whatever, forget those things for today, and that's probably for tomorrow. We have a lot to talk about as far as the economy, as far as what's strong, any potential weakening signs, and whatnot. Um, but as we went forward, I did get something very wrong, and because I aim for to be a little bit better each and every day. And each and every day, I try to make just little incremental gains. So when I look back, I could see these giant leaps I've made. And I mean, I could point to today, and I'd be like, look, what a great call in March 2023, calling gold super cycle. And gold is now at 3,300. But it wasn't a great call at all. And the thing that I missed and messed up was that at that particular point, we were still had not seen the turn in inflation into the deflationary strong forces rolling over. And once we did, once we go, you go into once you move over into the fall of that year, right? That's when you started seeing the strong deflationary forces really coming into effect. And that is when gold then bottomed and continued to run up. And the great thing about that is, look, I believe that as we undergo this monetary reset, we're going to continue to see sharper, quicker, more violent cycles. There's going to be another point in time that the Fed right now is just moving towards the rate cutting portion of the cycle, right? And they're not yet even close to the now we need to come in and move towards outright easing portion of the cycle. When they do that, this super cycle, this massive bull run, that's when we're going to be looking for it to come to an end, because that's when other people are going to be a lot more interested in growth opportunities. And growth opportunities are going to well outperform. But we're not even close to. And then coming out of that, there'll be another opportunity when the Fed moves back towards tightening. And then we're going to have to consult and remember what type of dynamic inflation at that particular point in time is playing into it. Because I don't believe the summer of 2022, that 9.1 CPI reading is going to be the highest we see. And I believe next cycle we're going to see higher double digit inflation. So when they begin tightening, it's gonna play a role in how we evaluate the market. And the reason I'm really hitting home on this is because we have before, we've really taken in these lessons, we've really talked about it, and it needs to be talked about again. And because going forward, sorry, I was caught up in this great question. So we're gonna talk about that in 1 second as well. But it's very important for those that were not with us every day and who did not hear or learn these lessons, be able to take them in, as well as people who were here and at the time who took it in. And sometimes you need to revisit very important details. One of the things that I have up on this chart though is the RSI. And since we're looking at RSI gold, I think it's very important to say that obviously we're at a very extended level right now. When I said I'll see you at 5,000, I that's just a number. I don't, whether or not it's significantly higher, which it very well could be, or whether or not it is lower, uh, you know, 47, 40. We'll revisit as we get there. We've hit our first two targets, right? And right now, price is very, very, very overbought. Not that overbought can't remain overbought, it very well can. But the point here is that normally, once this begins to correct, and once it begins to correct and you put it in the top, usually when price then is able to make a higher high, that's when the next move really begins to happen. You could see it each and every time. Look, here's that high, it pulls back under RSI, back under 70. And then once it breaks above that high point, it continues its move. Same thing over here. This time, it took a long time. This was, again, we talk about after they return to outright easing, that's when we're going to be looking for the top sometime after that, right? This was roughly 4 or 5 months later, this particular time. But look, once gold just consolidated in that drawdown until it's able to over here make the higher high, that's when we called the super cycle. And again, our timing could have been just a little bit better. Um, why would you want to buy uh, gold over Bitcoin? There are a lot of I mean, there's many situations, and guys, it's you're talking to someone who's obviously an enormous Bitcoiner, but I don't think I ever would have been had I not first understand hard assets and the value of gold. And there are a lot of OG Bitcoiners. I mean, I'm talking like people who are mining Bitcoins on GPUs back in the day, and they they are absolutely diversifying into gold. They see, I mean, these guys are clearly as early as you could as you be on Bitcoin. Not only as early, Obviously, they understood the bullish case for Bitcoin, or they would not have held it for so long. And there's no question you could tell these guys, or they could tell you, like Bitcoin's going to a million and it's not stopping there. And I believe that. So you're like, why would they sell now and buy gold? Right? Well, obviously they're in a position where they feel that it's much more prudent to diversify their wealth and make sure that they're able to hold on to it. Yeah, you don't like gold is obviously being revalued in real time, and I am under the impression that we are undergoing now a secular bear market in bonds. And it's very clear to everyone that right now, what's replacing that is gold. Instead of holding US treasuries, countries are continue to stockpile gold. Now, could it be one day that it becomes Bitcoin? Absolutely. Joy, if you ask me 10 years from now, which has appreciated more from today, gold or Bitcoin, of course, I'm going to say, I believe it's going to be Bitcoin. Gold is roughly a $22 trillion asset, market cap, largest in the world. And I think Bitcoin's going for it. And even if it catches it or it doesn't in the next 10 years, the appreciation of of Bitcoin versus gold is going to be wild. But that doesn't mean that at certain points gold doesn't outperform. And at certain even now, and if you look at this past year, let's do this together because this is a great question. It's really important. Not this past year, right? Well, that's not fair. Obviously, gold is outperforming Bitcoin. But what about from the election? Because I don't think it is. I think Bitcoin might be outperforming. So you go to November 4th, right? And Bitcoin is up 58% just since the election. I guess I'm on a 15-day chart. I don't know where it finishes, but Bitcoin is well outperforming gold since the election, since the new year, since January, because a lot of people will say, well, in 2025, gold is outperforming. Well, it's not even outperforming Bitcoin. It is. Bitcoin is break even, right? Since January. But I don't look at it like that. Here's January. Bitcoin up 10%, gold up 22%. But since the election, obviously Bitcoin is well outperforming um, gold. And I think that's a better actual vantage point to be looking at it from. New administration, obviously a lot more favorable towards Bitcoin. And you could see that it's priced in as such. And that's going to continue. Bitcoin is going to continue to outperform gold. Does that mean that you don't want to own gold? That's up to you. I mean, if you want to allocate everything that's up to you. I have no idea. Now, I could argue that on that 22% gain, if you're trading, we don't have this is the Bitcoin bull runs. This isn't not for gold Bitcoin. This is not for gold. I'm trying and I've tried to model something for gold. It's very, very difficult. Obviously, if you're trading gold futures and basically for each contract you have 100 ounces of gold, the leverage is absolutely insane. And yeah, like holding gold, at least on a future contract of gold, it makes a lot of sense, right? It's the ability to outperform Bitcoin is easily there. But it's not about outperforming, it's about diversification if you're interested in holding gold. And I guess Bitcoin is becoming more private, I suppose, if you are an expert at online awareness and using Lightning. I guess I'm not sure, but gold is the most private, right? Physical gold is the most private. So anyway, I think that everyone who is values gold, or I think they could call themselves gold bugs, should understand the bullish case for Bitcoin. And I think that everyone who understands the bullish case for gold, bullish case for Bitcoin, should understand why gold. I do believe that. Where does gold overlay with the DXY? It's a great question. Let's move over. Let's just take a look at here's why we're here. Let's look at bonds, and 10-year continues to be coming off and responding well to what appears to be the Fed moving towards that, towards the coming rate cuts earlier than expected, and that's interesting. Now, that could easily go the other way. Powell told us over the next 2 months, we're going to begin to see that indeed he was right. There's very little he has been right about, I think, in the past 5 years. But that he says that we're going to start seeing the tariffs causing inflation to rise. And if that happens, then we are going to see that show up very quickly and clearly in 10 years. I know that we're coming down. I know as we made the break, I said we could come down and test the bottom of the channel. I still think that this is going to wind up breaking out to the upside. And it remains to be seen when they do cut what happens on the 10-year. We looked at very closely. This is why I say stay away from the 10-year. I believe that the 2-year offers the best opportunity. And if you just jump down, since we did our little the best possible trade, you could see that that trade is beginning to take off, right? Which is short the 2-year. So you're going long ZT over here. If you invert it, you can see that that trade continues to move, and that's going to continue as we move towards the Feds begin to cut the 10-year. This is where I would say, well, something's happening where it's time to go long or break below. Um, and I don't know how I got on that, but I'm glad we got it into the stream. I was trying to get over here, and we wanted to look at what this means for gold. So let's try. So we lose the window a little bit. We lose the overlay, the overlays that I should have, but over here, and as the dollar really, this is the bear market in Bitcoin. Bitcoin under pressure, gold under pressure as well. As the dollar began going sideways, consolidating, making that higher high, gold did bottom and did not respond well at all as Bitcoin did when the gold devalued, right? That 2017 massive bull market in Bitcoin. Then similar situation, you're seeing the dollar massive appreciation. Gold does correct again as it did in this red period last time. This time is different as the dollar began consolidating sideways, moving up. Gold has been going up in lockstep. This is what the major difference here, though, is what's been happening in the bond market since 2000 January 2023. That's the major difference. And you come to January 2023 and you could see that, and this is the 10-year, but you can see the 10-year is higher. You go look at longer duration. Let's look at the 20 and 30 year and January 2023, and you are seeing a move away from long-term bonds and into gold. And that's the major difference right there. So I think uh, in this discussion, Ace, and what did gold do? I think then it becomes clear. Well, it's not about gold and the dollar. It's about bonds and the dollar. And I love that chart where you could see the 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 worldwide allocation into both U.S. Treasuries and into gold, and you're seeing them both move now in the opposite direction. As more money comes out of U.S. bonds, more money is going into gold. You know what? It's been a great. I love being here with all of you, and it brings just an amazing dynamic into the mix, and I'm grateful for all of you, all of your support. Oh, we gotta keep going over here, and I feel like I could just go forever with y'all. So silver is pretty amazing in so much as that we're watching the breakout, right? We continue to hold any type of de-risk, but I mean, silver is now making 36 look comfortable, and that's amazing. And it feels like we are on our way to 50, and you know, it's so hard to say. You ready? So what's going to happen here? And I ask all of you, like right now, as we look at the S&P 500's performance since the election, 156 days past the election, the S&P's performance right now is average. And what do you think happens going into the end of the year? And do you think going into the end of the year that performance will be below or above average, right? And we looked at this one yet, like earlier this week, and we tried to say, I mean, this could be going sideways from here, and then maybe it'll just continue to be average, and that's a strong possibility. Now, if it's able, and I think by the as we get through the summer, and then if it's in like towards these top deviations, then there's a good chance it'll continue the rest of the year to outperform. I think it's too soon to make that conclusion of where we are, like what will happen. So, and this is also important to look at. This is just seasonalities, and we've overshot seasonalities very strongly to the upside. This next 2 weeks, not only we look at the corporate buybacks entering into the blackout period, so we lose that roughly $10 billion a day bid, but then we're also looking at insure insure I'll say institutions. We're looking at a $26 billion of selling pressure on U.S. equities as well. So if they can, and you can see this is normally these 2 weeks is normally a unfavorable moment. If the market absorbs that, absorbs the lack of buybacks, and absorbs the institutional $26 billion selling into the quarter end for reallocating, that's significant. Um, but we don't know, and it's unknown. And I guess what I'm saying is, if we see equity markets move into like this type of trajectory, I don't know that that's the most favorable moment for precious metals. And you might start seeing, if we're seeing, Mag 7 leading, you might see a lot of money allocated there, and you might see a very healthy consolidation period for both gold and silver. Uh, and because then beyond this year, we need to look at what's ahead. I would not be surprised if that's what happened. What does that mean for silver? Is silver going to be able to maintain? This is so bullish when like it's defying gravity, like 30 for silver to be holding 36, and we look at what Bitcoin's making $100,000 comfortable. It was this enormous milestone, and now it's becoming very, very now we're going to talk about uranium in 1 second. It's becoming very, very comfortable. And the same thing with silver. And I like to hope this is like it's going to be able to make that run. I don't. It doesn't matter how long it takes. The longer the better. But work towards 50. I don't believe silver makes the breakout and the run until like Fed policy returns to outright easing. Maybe I'm wrong, but I don't think that happens. But it certainly could work its way towards 50 before then. And if we start seeing just a real strong allocation into the growth and silver consolidates, what does that mean? Like, well, if we could hold this trend line throughout all of that consolidation into the end of the year, so above 30, right? That's all very bullish. It's all very bullish. So we want to talk about uranium, and this is definitely inspired over here by Mr. Holding. And Mr. Holden, he joined us after viewing. He just joined us like within the last week after joining us for 5 years. And he's saying he's so excited to be a part of this. But I have to tell you, I'm so excited because you could tell when someone is, first of all, just gonna be like just become such an important part of CTM. And so CTM is like building blocks where the hive mind just feeds off each other. And he doesn't know it, but generally it's the more that you work with the group, and then the more the group kind of, they're the ones who kind of like bring you to the top. He's like, he said this is the first course he's ever joined. I'm usually quite hesitant, but you have been my OG mentor. You taught me such strong philosophies for free, and I'm ready to level up even more. You didn't only help me get into trading, you helped me get into algo trading, which I will do for the rest of my life because I'm addicted to it. I appreciate the heart and truth you bring to this community. Your importance and nurture of community really shows in CTM. And he was like, "Listen, let's talk about the uranium awakening." And we the last time we spoke about it was when it was just breaking outside that wedge, and look what it's done since. Uranium's funny. You know why it's funny? Because uh Matty H yesterday was like, yeah, because we're making sure he's all up to speed on CTM stocks, implementing the new micro strategy and IBIT. And he's like, aside from that, I've took a position in uranium. And I'm like, man, Matty H, I remember in 2017 when he was buying XRP at like 20 cents. And I remember when it went up to $3. And then I remember last in 2020, he was heavy into Ethereum, and Ethereum, that fast boat during that period. And then when he's like, I'm into uranium now too. I was like, man, he's just always on time. He's always on time. And then like not only that, it just helped me understand that like a lot of, you want to be in trades where there is obviously a lot of interest, right? Those trade, and that's he's my barometer for what are those type of things. And a lot of people for sure have been interested in uranium. And I'm looking at these headlines over here. And so at first there's the proposed Uranium for Energy Independence Act of 2025. I don't see anything happening with it at this particular moment at all. But what I do see is that it is in progress. And, that's a big deal. What I do see, though, is coming back over to the summer of 2024 that a bill was signed to boost nuclear reactor deployment. That seems very bullish. The chart is not since then. You go back to July, the summer of 2025. This is platinum. Ugh. That's why, Jordan. Uh, what's our ticker? Someone give me the ticker. Anyway, let me continue until you guys do. Um, and I think all of these data centers, these AI centers, they need energy. And it's funny, like Bitcoin, it was like, oh, it uses too much energy. And now we've seen the development and advancement of AI, and it's like, who cares? It needs like ridiculous amount of energy. Let's go ahead and you are in. And let's go ahead and it's all good. Let's actually bring back on nuclear power. But there's a huge move towards it. I've always actually been really supportive of. Go back to July of 2023. Yeah. So even when that bill was paid, you saw the initial reaction, and then we're higher than we were today. What happened in April? What happened in April? You saw House Bill 1040, nuclear is now officially a clean energy source. And I think that this might have been just like it was definitely been the catalyst, but I think it might have been or leading up to actually some further legislation being passed, and we're for sure seeing a much stronger push into nuclear. You see China's, I mean, their advancement is at a rapid rate between solar and nuclear. They're not even going to need oil anymore. I say that like jesting, but sincerely. And the more that's, I mean, I wonder, right? Is a lot of people keep looking for that triple digit oil. You saw a war between Israel and Iran not get it above $76. You know, which direction long term is oil headed? Let me check out URA. So you got a great chart here too, and you know what? He like Mr. Holden just joining CTM. It looks like he understands CTM structure very well. It's a beautiful chart, really, really beautiful chart, and you could see that it looks like we're getting very close into a confluence of resistance. It looks like we're getting very close. He's looking at platinum though, no? And so let me say. So I ask all of you, to me, I feel like I missed this. And then what? Is that someone like, a gold breaking out from 2000 to 2500? People are like, "Oh, I missed that move. I wanted to come back. I wanted to come back down towards 2000 and then I'll buy." Here today gold is at 3300. Is that Bitcoin when, it's trading at $55,000 is cheap and people are like, I want it to come back down towards 30K and then I'm going to buy. And now gold's trading, I mean, Bitcoin is trading at $100,000. Is To me, it looks like, wow, like I was just not, it was not on my radar at all. And I've completely have missed this. I cannot chase up here. Or is this something that, you know, what are your feelings? That's what I want to know. So please share them. Anyone who's watching this on the replay crew, by the way, big shout out, everyone on the replay crew. Go ahead and leave me your thoughts. I'm genuinely and very interested in it. And Doggy Nation is, I gotta, he's always early as well. He's very close to the Matty H indicator. And let me just bring up Circle, right? Doggy Nation on the IPO. Massive. All right, everyone. I got to get to a meeting, so I'm gonna jump out of this beautiful session, and just lots of love, everyone. Have a beautiful day. God bless you, and I'll see you tomorrow.